Let's talk oil with one of our favorites, Bob Yawger of Mizuho Securities. He heads up, or he's managing director and energy futures strategist. Bob, it's great to have you on the show.
Thank you, Andrew.
Let's have a look at crude. It's been flirting with $70 this morning. What is holding oil down right now, do you think?
Well, I think it's you got a lot of cheap Russian barrels out there. You had a big build of over 7 million barrels in the EIA storage report. We were up over 1% earlier here. That got squashed by 7 million build in the EIA storage report. And there's still questions about the Chinese demand situation, Andrew. And those three pillars there are putting pressure on the barrel. U.S. domestic production right now of 12.4 million barrels is a post-COVID high.
Oh.
They said that last week. It did not go higher again today, but it probably doesn't want to go much higher because that will be too many barrels on the market and put pressure therefore.
I'm kind of scratching my head, though. We kept hearing, the oil companies have found religion. They're not just boosting production if they can't generate the cash flow, but they are, in fact, increasing output.
Well, I tend to agree with you. That was the formula that was working really well for them. They XLE, basically the S&P 500 energy companies and all the other associated energy companies were doing great by increasing dividend and buying back shares. But at the same time, we're getting an increase in domestic production here. The rig count is not going higher. It's not like they're drilling holes for size and approaching anything remotely close to the most rigs in the ground of all time. But they're hitting some of the sweet spot, apparently, and they're doing more with less.
More with less. That's always a favorite mantra for management, isn't it? Executive types. Tell us about this IEA report. Nothing radically new, but they do see oil demand growth tapering off pretty rapidly. And they say within a few years, we could finally see a drop in oil consumption for transport purposes.
Yeah, it's the wave of the future. I mean, you see more and more Teslas out there every day. It's on a 12, 13-day winning streak as far as the equity is concerned. There's some relative, the Eco Clean Energy Index, which I watch every day, that has been higher for percentage points for 2 days in a row, but it's still way closer to the multi-year low than it is to recent highs. So that has some work to do. There's, let's say, for example, Tesla just booked that charging deal with GM and Ford, basically. That leaves a lot of other charging companies out there in the dust to a certain degree, or they have to improve their product to draw attention. Charging, in my opinion, is an issue that it's difficult to a certain degree, getting less difficult, on the other hand, to drive from New Jersey to California in an electric vehicle here in this time and age. If you do have to charge, the most impatient person on the planet, the average American, is going to complain to the end of the earth if it has to sit around for 20 minutes on Route 80 in the middle of the continental United States to charge the car. That has to change for the IEA's forecast to kick in my opinion. There's still work to do. They'll get there someday, sometime far off in the future. It could be 5 years. It could be 15 years. We're moving in that direction, but I don't think it's going to happen in the next 15 minutes. The demand number for the IEA was an all-time record 102 plus million barrels a day for 2023. And it does slide to only demand growth of 800,000 barrels in 2024. So you're starting to see it even in 24. But we are going to set the record this year.
Bob, here's a statistic that blew us away in the IEA report. Last year, SUVs were 46% of global car and van sales. It sounds high, and I guess some of these things are crossovers. I'm sure definitions vary, but people seem to want to drive around in giant vehicles.
Andrew, it's there. That's the American way. It surprises me too. But do you know that here in the United States, at least, to buy one of those big giant Cadillac SUV, 8-cylinder SUV, you're paying above sticker price for that bad boy. You're not going to walk in there and take that car off sticker price. Not going to happen. There's so much demand for that vehicle right now that you're lucky if you could even find one. Better yet, take it away for just a couple percentage points above sticker price. That's a hot vehicle right now. That flies in the face of the whole green movement, and it's crazy. But yeah, it's the demand for those vehicles is through the roof. I know when I go to home, there's several of them parked in the parking lot where I park my car to take the bus to work. And I know the guys that drive them, and they're trying to upgrade their vehicle, and they can't find one that they can basically afford.
Here's a story. I got to get your take. You're a New Jersey resident, and now I'm not sure. I think you said you take the bus to work, but a lot of people drive. I know into New York. I mean, your governor in New Jersey, Phil Murphy, not happy with this New York traffic plan that could see drivers charged $23 US to drive into Manhattan. He says parts of it are unfair to New Jersey residents.
Well, I mean, I don't know what he's upset about. If you charge people $10 to go through the Lincoln Tunnel, the line, it would take you an hour easily to get through the tunnel at, say, 8:30 in the morning. Easily. You're not going to drive through there without some kind of friction. It's not going to happen. I mean, I blow through there at 5:30 in the morning on a bus, and we drive through that. But one of the reasons I'm getting there at 5:30 is to avoid that situation. And it's expensive now to get through there. And it's bumper to bumper for miles. And some days, if anything goes wrong, it's many miles. Whoa. So, yeah, I have no problem with them raising the price there. My bus ticket will probably go up accordingly, but it's a mess. There's too much traffic there. It's if you want to get to the city fast, you have to park your car in New Jersey and take one of the like the PATH train. It's a train that goes under the Hudson River. You can't drive; you'll never make it. It was stuck in traffic for hours.
But Bob, we always love talking to you. But leave us with a final thought: is oil going to be stuck around $70 US for a while? WTI?
Yes, I believe 67.5 bid at 72.5 for a while here.